Good morning, everybody, and welcome. And Deborah, thank you for having me from the Women's Business Center to present on some material that we feel that is important to the consumer and also anyone that is either looking to start a business or expand their business, or if they're just looking to understand how the algorithms work and what's the difference between personal credit and business credit scores. And I wanted to formally introduce myself. I am Sabrina Davis. I'm the Vice President at Fulton Bank at the Bonnie Road office. I've been a financial advisor for over 24 years, and with this material, I have found it is very critical to help a lot of my clients over the years, and I'm excited and honored that the Women's Business Center has asked me to present this material to the community that they serve as well, and we all serve. So I am extremely passionate in helping small business owners and business owners for that matter. I am, as I mentioned, from Fulton Bank. We are a medium-sized bank, if you will, and we serve 5 different states. And with Fulton Bank, I have chosen as a financial advisor to journey with my career there, and they're extremely user-friendly with small businesses on so many levels, and that's why I've chosen to have my career there. And I guess I want to start by saying and reviewing the top 3 reasons why, in my opinion and survey of the communities around us, why a business might fail. And one of those top 3 reasons is knowledge. They just don't know what they don't know. And congratulations for being on this call. Because one of the most critical pieces to being able to lend or borrow for your business is your personal credit score along with your business credit score. And in some cases, I have found that to be an aha moment for a lot of entrepreneurs. They don't realize that your personal credit score is just as critical as your business credit score. And how do you figure out the difference between the two? And you know, when I think knowledge is power, and that's been said over and over again, I want to take it to another level. Applied knowledge is even more powerful. So just wanted to take a moment and really, over the next 2 hours, take you on a journey to put your mindset in the mindset of a bank and how the bank thinks about it and how they pursue and what their perception is on credit scores. And help you understand. So if there's frustration or confusion, this will help clear that up. Not only help clear that up, but also help empower you to take ownership of controlling that. What are some things and techniques that you can do to help your personal credit score or your business credit score? So I digress, and I go back to the top 3 reasons why businesses might have the challenge of closing up or failing. Hopefully that is not your situation, and I know with the COVID, it can be a little challenging right now. So the second reason is lack of capital. A lot of businesses are looking for additional capital, whether it's to get them through the COVID-19, or whether it is to expand their business, or it maybe might be a startup. You need working capital to get started, and how do you figure all that out? Well, I will tell you the next session that the Women's Business Center has is going to be in February, and please look that up, because what we're going to do is take you on a journey of what the bank looks for when you're looking to borrow for your business and what is required. Take you also on a journey of understanding different options of different types of loans out there, because at the end of the day, all banks and credit unions are not the same. We all have different business models. So it's important for you to understand that you need to get out there and interview the bank and make sure it is a good fit for what your financial goals are for your business. It doesn't make them a bad bank. It doesn't make them a bad credit union. We all have different business models. And it's one of the reasons why the Women's Business Center asks Fulton Bank to be involved with helping their clients, with presentations, because we are extremely user-friendly when it comes to that. We are a premier lender for SBA. We help our clients, whether you're a startup or whether you're expanding. We are the customized fit to every business that's out there, and we offer a lot of different products and services. So please come and interview me. Please reach out to me. I'll give you that information of who I am. It's actually up on the screen right now at the top left for my contact information. And I would love to, even if you don't choose Fulton Bank, as you know, my passion is to help business owners and entrepreneurs, regardless of what that looks like. And if I can point you in the right direction, or at least answer some questions on a detailed level, I'm happy to do that. So lack of capital, lack of knowledge, and then the last reason is lack of planning. If you fail to plan, you plan to fail. And having a business plan, in my opinion, is one of the most critical pieces to your success of your business. Whether you're already in business or you have done your business plan, time to tweak it, time to upgrade it, time to refresh it, or you're a startup business, it's really your roadmap. Think about it. If you're looking to get from A to B, let's say California, you're deciding, all right, I really want to go to California. Well, how are you going to get there? You could possibly just get in your car and wing it and decide, hopefully, you'll get there. It's going to be a very frustrating process. You probably won't get there at the end of the day. So think about your business and the business plans that you are going to consider doing, or maybe already have, as your roadmap to the success of your business. It really helps you fine-tune and get from A to B, and think about those things in advance to your business and the success of it. So in my opinion, those are the top 3 reasons why businesses might fail. And again, I am honored to be here to present this information. In the next month's session, we're going to review the 8 C's of credit, helping you identify and understand how to be ready to apply for a loan with a bank. If you have already applied for a loan and you've gotten turned down, this will help you understand the reasons why that might be the case. If you're looking to apply for a loan, this session will help you be ready and prepared in advance and understand what you need to apply for that loan. So again, join us next month and sign up for the following month's webinar from the Women's Business Center to help you understand that. Well, I say that to say this. In those 8 C's of credit, the last C we talk about is your credit score for your business and your personal credit score. So this is the module that we are usually advancing to after we've reviewed those 8 C's. So I wanted to explain to you, this is that last C. And it is very, very critical for you to understand that your personal credit score is just as critical when applying for a business loan. So what I like doing in this particular situation is reviewing what is a personal credit score, how can you control that, empower you to be able to understand that you are in control of that, dissect the 5 algorithms and how to do that. So one of the things that I wanted to take a minute and talk about as well is understanding partnerships for your business. We talked about the top 3 reasons why a business might fail. In my opinion, the top 3 reasons why a business does fail, and if that's the case. So I want to take you through another something to think about as you are starting your business or you already have your business. Typically, I like to do a round robin to get to know who's on the call. However, we had 80 that signed up for this class today. So I know that we would spend 2 hours going around talking to 80 businesses or entrepreneurs. So we're not going to do that. But I want to give you additional value for your call and make sure that I'm adding value and not wasting your time. So I want to talk about the BAIL team. And the BAIL stands for BAIL, the acronym, and those are critical partners for your team, for your business. And what does BAIL stand for? The B is for bank or credit union. The A is for your accountant or CPA. The I is for your insurance company, and the L is for your lawyer or your attorney. So one of the things that I had mentioned is interviewing. So picking your BAIL team out is very critical to the success of your business. But I want you to understand, just because a bank is right around the corner, it might not be the right partner for you. They might not even have the product or service that you need for your business. So it's really critical that you get out there and you interview your BAIL team. And I mentioned they're all not the same. It doesn't make them a bad banker or a bad credit union or a bad CPA or lawyer. You just need to interview and find out what's the right team for you. There are large corporate lawyers. There are small business lawyers. So you really have to get out there and find the right attorney and the right lawyer for you. When I think about CPA or your accountant, you know, the type of accountant you should be looking for is the advisement counselor, CPA. There are CPAs out there that spend every month or at minimum once a quarter to talk to you and advise you and counsel you. You know, you did not get your education and your training, in most cases, a degree in being a CPA. You're paying for that service. So you don't know what you don't know about a CPA or accounting or tax deferment or tax write-offs, ways to strategically put a plan in place for your business, you know, even before you do the expense. And that's what your CPA is there for. If you're waiting till the end of the year to bring all of your documents together and to, at the last minute, do your taxes, and, you know, it becomes more of a fire drill, I guarantee you're leaving money on the table when you have that type of experience in doing your taxes. I encourage you to find that consultant in a CPA. And if you have an existing CPA, you know, put them up to each other. You know, if one is better than the other or so on and so forth, that's what the interviewing process looks for or looks at. You know, interview them as though they're going to be a partner for your business. How long have you been a CPA? How many additional businesses like mine do you help? How long have you been doing that? Are you a consultation CPA? There are CPAs out there that do consultation and they don't charge you, but they charge you to do your taxes at the end of the year. You know, interviewing and finding out what's the right BAIL team for your business is really critical. The insurance piece is the biggest overlooked piece, in my opinion, from most businesses. And the way that I want you to think about your insurance is I don't want you to be overinsured. I want you to get out and fact find, go on a mission, find out all the differences in what types of insurance that you can provide for your business or your personal life or your family to protect. You know, how do you mitigate risk? How do you protect your business? If somebody were to sue you, how can you protect yourself? That's really the insurance piece. How can I mitigate risk on my business to protect it? And get out and really go on a fact-finding mission. What are your options? What are the different types of business insurance out there? And I guarantee you, as long as you're finding an insurance company that specializes in the industry that you serve or you're looking to serve, there are a lot of things you haven't thought about that can protect you and your family and your business. So, and of course, the banks and the credit unions, we talked briefly about that. Get out there, interview, throw in a large bank, a medium bank, or just come see me, Fulton Bank. We are a medium-sized bank, and throw in a small bank. And if you are interested in a credit union, throw in the credit union. Get out, interview them, find out if they are the right fit for your business. There's nothing more frustrating to be banking with a bank for years for your business, and then you are now ready to do a loan, and they tell you, I'm sorry, we can't help you, because they don't have the product or the service to be able to help your business. Very frustrating, because now you've got to start over and try to find a bank that can help you. And one of the things that we look at is your history with the bank when you're applying for the loan. It's not a decision maker, but it's something that can possibly get us over the hump to be able to approve you for the loan that you're looking for if you've had a long time relationship with us. So things I want to bring to the table to help you understand and think about as you are taking on the journey of finding the right bail team for you. So with having said that, that takes me to moving forward with our presentation. So this first presentation, we're going to talk specifically about your personal credit, the 5 algorithms of what defines your personal credit, and really dissect each one of these. So what is a credit score? What does it mean to the bank? I mean, realistically. So at the end of the day, this is the way that I can explain the way that a credit score really works. It's not just a score. And just because you have a good score does not necessarily mean you're going to get approved. There are additional 7 other C's that we take in consideration to get approved. Of course, that's going to be on the next presentation for next month. This is just one of the C's. You need to know about the other C's, which are the 7 other additional C's. This just happens to be one of them. So a credit score to the bank is, at the end of the day, whether we can trust you to pay the money back. The banks are risk adverse. They just want to know they're going to get their money back. And a credit score is a way for us to really look and see if we can trust you. Now, please understand there is no judgment there. You can never judge anyone for having a challenged credit score, because there are things out of our control. Things like loss of a job, things like unexpected medical expenses, throw in a divorce. And those COVID-19, who would have known? There are things that are just unexpected that are in somewhat out of our control that might cause you having a challenged credit score. And therefore, you can never judge or speak into somebody's life of why that score might be challenged. And that's why it's important that you take ownership, because you can really manage your score as well as manage your business. And it's really important that you do that. So with having said that, your score is really whether we can trust you. So I'm going to take you through how you can build that trust with the bank through your score and make it even stronger. If you're on the call and you're in this class today and you have a great score, this will help you understand how it's great and how to keep it great. Or if it's a good score, how to make it great. So I thank you for being here, and I encourage you to take the next class that will be coming up next month. So things I want to talk to you about before we get into the algorithms. Typically, I'll ask by a show of hands, how many are using Credit Karma, Bank of America program, Capital One program, it may be a credit union program to understand what your credit score is. And because we have so many on the line, I'm just going to go into explaining who they are and what they do and the importance of them. So I personally really like Credit Karma. They do not pay me to say that. I've just been using them for over several years for me and my family. The reason I like Credit Karma is because they help you understand the algorithms that I'm getting ready to review. They help you manage it. You don't have to figure it out. It will tell you exactly where you are in your personal credit score of each algorithm and help you understand how you can make it better. The other reason I like Credit Karma is because if you decide to do a loan or pay off a credit card, if you do anything with your credit, you can ask it a question. Look, if I pay off this loan or this credit card, what will it do to my score? And it'll give you their best guess of what it's going to do with your score. So the other reason why I like Credit Karma is because it gives you 2 credit bureaus. It gives you TransUnion and it gives you Equifax. And then, of course, there's Experian, but Credit Karma does not have that. You can actually go to a program that's called Experian and figure out what that last bureau is. So I want to take a moment and explain this to you. If you're thinking that is your score, it is not. There is only one way you can find out what your actual credit score is, and that is applying for a loan and you get approved or declined, and we are regulated as a financial institution to send you a letter to say if you're approved or declined and which credit bureau we pulled. And in that letter, it gives you 3 factors that you can work on for 3 algorithms to increase your score. Whether you're approved or declined, it will always give you those 3 factors. That is the only way you can find out what your actual score is. So you're probably thinking, Sabrina, I go directly to Experian and they tell me that's what my credit score is. It is not your score. You cannot get your score. You cannot pay for your score. The only way you can get your score is if you apply for a loan and you're approved or declined, because we are regulated to send you a letter and tell you what that score is and what bureau we pulled. And you're probably asking, well, then why do they tell me that's what my score is? It's just not your score. So what are these programs? What are they doing? Why are they telling me that it is my score? And let me explain to you, because I like the programs. It gives you a way to manage the 5 algorithms. And what they are doing is they are taking a soft pull of whichever bureau and looking at your trade lines and then plugging your information to their algorithm program and taking their best guess of what your score is. It is not your score. And a lot of questions I get is, why is my score on my Credit Karma different from my bank score that I applied for? And, it says that my score is this, but Sabrina, you're telling me that my score is that, and it's about 20 basis points different. And that's the reason why it's not your score. They're taking their best guess at what your score is. You can only find out what your score is if you apply for a loan or mortgage or secured loan, credit card, and we are regulated to tell you what your score is by mail what, if you're approved or declined, what bureau we pulled, and 3 algorithms that you can work on to increase it. And I hope I'm very clear about that. So let's take it a step further. There are 3 bureaus, as you're aware, Equifax, TransUnion, and Experian that we just spoke about. But let me be very clear about one other thing. Be careful who you go in business with. If you have a partner that's 50-50, or you're considering to open a business and you're considering to have a spouse or a managing partner that is, you know, maybe 75-25, you own 75, they own 25. You have great credit, but they have challenged credit. Your good credit does not make someone's challenged credit good. You're still going to get declined. So be careful and understand, if you're going in business with someone, to understand that you should have a conversation about what their credit bureau is. If they are a 10% owner or more, they will have to be a guarantee on any loan that you're doing for your business. So we are going to pull their personal credit score as well as the business credit score of any owner that's 10% owner or more. And you should have that conversation. And if you're thinking about going in business, maybe if that partner doesn't have great credit right now, you add them as an owner later. They need to fix their personal credit first. And remember, I had mentioned if you have a challenged credit score and there's medical expenses or those uncontrollable things that have happened that have made it challenged, before you go in business, that needs to be fixed. If you're already in business and it's a challenged personal credit score and those things have happened, please understand if there's collections or judgments, those things have to be fixed first. And to come up with a strategy of how you can fix it is really important. And it can be fixed. So that's why I take you through this presentation of understanding the algorithms to help you understand how can I fix it, or how can I take my score to the next level and make it really great. So let's get right into it. 35%, that's the first algorithm of your credit score, goes to your payment history. Some people think, well, that's if I pay my bill on time, or if I make a late payment, that's going to make my score go up or go down. Yes, but there's more to it. It's not just whether you pay your bill on time or you pay it late. Let's talk about what that means. It's also based on your date of last activity. So I'm going to give you an example. Let's say you have a $10,000 judgment. And you have, and it's 3 years old, and you haven't touched it, you haven't paid on it, and you have a Pizza Hut collection that you just paid off from 5 years ago for $14. Because you paid your Pizza Hut collection that's 5 years old for $14, that's going to weigh more than your $10,000 judgment that you haven't paid for 3 years. And the reason why is because, and you're like, Sabrina, that doesn't make any sense. $14 is hardly a drop in the bucket based on, you know, your $10,000 judgment. So help me understand, why is that the case? Why is the $10,000 judgment weighed less? It's because it's based on your date of last activity. Remember, this is an algorithm. This is a computer. They are averaging what you're doing on your credit bureau. They are taking into consideration anything that hits it whenever you touch it. Any and everything that you do with your credit, it's an algorithm picking up what you're doing. So the reason why is because you haven't touched your judgment in over 3 years. And it's not picking up that judgment like it should. But you just paid on your collection for your Pizza Hut You could have a 700 score, and as soon as you paid on that Pizza Hut collection and paid it off, your score is going to plummet 35%. So you're probably thinking, well, I'm not going to touch it. I'll just, if my score is 680 and I have a collection or a judgment, I'm just going to go and try to get a loan now, because if I try to pay on it, it's going to plummet my score by up to 35%. Well, that's where you get the human factor. You go into the bank, you apply for the loan. Sabrina Davis is going to pull your credit, and we're going to look at it. And as soon as we see the judgment of the collection, it's an automatic decline anyway. So the point is, take control and come up with a strategy of fixing what is broken on the credit bureau at this point. Try to mitigate the risk and make it as strong as possible on your score, because at the end of the day, it's a trust factor. If you haven't paid that judgment or that collection, why do you think that the bank thinks that you're going to pay us? We're not going to trust it. We're going to think you're not going to pay us. And we want you to pay your collection and your judgment off first before we give you more money. So that just has to be fixed. So again, the date of last activity represents the weight of the account within your payment history section. Simply put, the newer the account, the more damaging it can be on the credit report. So having said that, it's based on your date of last activity. And that's what you want to keep in mind of your credit bureau of this particular factor, and how you can control that. So, Sabrina, if I have, based on date of last activity, what are some things that I can do to control this particular part of the credit bureau? And one of the things that I want to talk about is simply managing it through disputing if you have any errors. Whether it's an error or not, dispute it anyway. You have nothing to lose. And when you dispute your credit bureau, basically what that is saying is you're saying to the credit bureau, please contact that institution and have them prove that you didn't pay on time or there is a judgment or a collection. Then it's up to them, the burden of proof is up to that institution to prove that you actually owe that debt, or you didn't pay it, or that you have a judgment or collection. And then they get back with the bureau and show proof. If they don't get back with the bureau and don't show proof, then the credit bureau will drop that trade line against you. So you have nothing to lose. So that is one of the things that I would recommend very strongly, to be able to show burden of proof. So the next algorithm we're going to talk about is 30% goes to your available credit. Your credit limit minus the amount you owe. So, 30% is Mac Daddy. It is a large number, and you want to be able to understand how this algorithm works. So I'm going to give you an example on the next screen, and then I'm going to give you some things to think about of what you can do to help with this particular algorithm in some cases. So when we talked about the 35% goes to your payment history, and you're trying to rebuild credit, one of the other strategies you might be able to put in place is to add an authorized user. So if you have a family member or friend that has good credit, and they have like a credit card that's like a $20,000 credit card they don't use very often, but they use it a little bit and they pay it off, that will help your history. If you call them and you say, look, can you add me as an authorized user to that credit card, or whatever the situation may be, and then you will be piggybacking on their good credit card that they have for a line item. That can help you rebuild credit. That can help you build credit even if you're new to credit. And there are a lot of other things that you'll be piggybacking on that I'm going to talk about and articulate to throughout the other algorithms. So you're saying, well, Sabrina, you know, I can call my dad or my mom and ask them to add me as an authorized user, but they're going to be concerned that I'm going to rack up a lot of debt if they add me as an authorized user. Well, you can quite simply ask them to add you as an authorized user, but do not send you the credit card. Just because you're an authorized user on the account, it does not mean that you have access to it. You actually have no authority. You're an authorized user. You're not a joint owner. So you cannot call up and get any information on any credit cards that you're an authorized user on. You cannot call and get the card sent to you as an authorized user. You cannot call and ask what the balance is. You can't do anything. They're not going to give you any information because you're only an authorized user. You can ask your family member to add you as an authorized user, but don't send you the card. That way you can piggyback on the good credit, but they don't have to worry about you racking up a lot of debt on that card. So that is the answer to that question. You can have that technique or that strategy to help rebuild or build credit in whichever case that might be the situation. If you're on the line and you have a teenager that's getting ready to go to college, you can add them as an authorized user to one of your credit cards that has good credit, and you just use and pay off every month, and they'll be ready when they get into college to maybe get their own car loan. You're helping them build their credit in advance, and you can do that. So just to give you some strategies and what you can put in place to help manage these algorithms. So let's go into 30% available credit. I'm going to give you an example of what that looks like. Let's say you have a $2,000 limit on a Fulton Bank credit card. It's at a zero balance, but you have a $2,000 limit. Let's say you have another $2,000 limit on a Bank of America credit line. Let's say you have another $1,000 limit on Capital One. So all of that added up is going to be $5,000. So in other words, you have $5,000, you can go all over town and rack up a bunch of debt for $5,000, right? So as soon as you get to a $1,500 balance of that $5,000 limit, you have decreased your score and plummeted it by 30%. This is huge. Take a minute and really reflect on that. If you use $1,500 of that $5,000 limit that you have total, you have plummeted your credit score by 30%. So those clients that don't even have a credit card, don't even have a line of credit, you are plummeting your score by 30% because the algorithm cannot pick up any credit cards or lines of credits that you're using. Therefore, you're decreasing your score by 30%. Sometimes I have clients that I come across and they say, I don't have any credit cards, I don't have any lines of credits because I got myself in trouble with credit cards back in the day and I refused to use them. They're hurting themselves.
Hey, I have Joe White on the line. Hold on.
All right.
So they are hurting themselves. The important thing to know is I'm not advising you to go out and rack up a lot of debt. What I am advising you to do is manage this algorithm. So what does that mean? You can do a couple of things, and this is how this works. Here's how it works. If you take the $5,000 and you take 28%, that gives you a $1,400 limit. So once you go over $1,400 of the $5,000 limit that you have, you are over 28% utilization and you are plummeting your score by 30%. So it is very important that you don't go over 28% of the $5,000 total limit that you have. Let's say you only have the Fulton Bank credit card and it's $2,000. Do not go over 28% utilization of that credit card. But if you have a Bank of America, a credit card from Fulton Bank, a line of credit from Capital One, you want to take the total sum of all of your limits and take 28% of that and don't go over that total. It's not, don't go over 28% of the credit card for Fulton Bank, don't go to over 28% of the Bank of America. That's not how it works. It's your total sum of open to buy or your total limits of what you have. Don't go over 28%. Okay, so let's talk about solutions. I'm all about finding out what the options are and solutions. Let's say, well, Sabrina, I am over 28%, and now I know why my score might be a little challenged. So what can I do to get that under 28%? One thing, just, very simply, pay it down. Pay down your balance to less than 28%, and you will start to see your score increase. And it's going to take about 3 months for your score to increase. And I'm going to tell you why. Your credit bureaus update every 30 days. They don't update before. They update every 30 days. And each one of them update throughout the month. So Equifax might update at the beginning of the month. TransUnion might update in the middle of the month, and Equifax might update maybe the 20th of the month. So it takes 60 days for all 3 bureaus to update, and they have all updated. So that's why it could take up to 60 days for all 3 bureaus to update, and then your score to reflect, and then you've got the algorithms that take that into effect where they're averaging out the 5 algorithms. So it could take up to 3 months just by changing one thing or another on an algorithm for it to reflect in your score. It's not a fast process. But this particular algorithm is the fastest because at the end of the day, the algorithm is anything over 28% utilization for a total sum of your open limits and lines is going to decrease your score by 30%. If you're under 28% total sum, it's going to increase your score by 30%. So please keep that into consideration. So you have the option of paying it down. You have an option of opening another credit card and increasing your limits to decrease your open to buy or to increase your utilization. Another thing that you can do is call your existing credit cards and increase the limit. And that will give you more open to buy, and that might bring your utilization score, amount down. You can also ask your family or friends to allow you to be an authorized user. So you remember that example of asking your dad might have a $20,000 limit on his credit card. He doesn't use it very often. And you're asking him to add you as an authorized user, your limit will then now increase by $20,000 on your credit bureau because he added you as an authorized user. Although he may not give you the credit card to use, he's helping your score in this category as long as he's not at $20,000 limit, because if he has a high limit and he's got a high balance on that limit, he's not helping you out at all. You're not increasing your score in this algorithm if they keep a large balance on the credit card. So be careful asking somebody to add you as an authorized user because you could possibly be piggybacking on somebody's challenged credit. So make sure that, first of all, they pay on time. And make sure if they're adding you as an authorized user, they don't really use the credit card that much and keep a large balance on it. that will help you not only in your payment history, which is 35%, it will help you in this credit category as well, which is 30%. Think about it. That having somebody add you as an authorized user could possibly increase your score just by doing that for 65%. That is a huge number, and that can help you. The other one is, of course, paying down, as the example before of the $5,000, paying down the limit to $1,399. That's under $1,400. You have $5,000 limit, and that will increase your score 30% right off the bat. So I hope that makes sense. Typically, if we were face-to-face, I take questions and all of the above. What I'm hoping to do is have enough time at the end of the session, because this is going on until 12 o'clock, to take questions for the last 30 minutes. So please jot down any questions you might have, or thoughts or comments, and we'll take those questions at the end as much as possible. If we don't get all of your questions in, you can reach out to the coordinator, and they will get back your questions to me, and I can answer them as well. So let's move on. 15% goes to your length of history. So the length of history, I'm sorry?
People can add their questions to the chat if they want.
Okay, so if you have any questions in the meantime, you can add it to the chat. And Deborah, I just want to let you know, I can't see the chat when I'm doing the presentation. It doesn't allow it to come up.
That's not a problem. Then you'll be able to address the questions towards the end when you can.
Sounds great. Thank you so much. Okay, so 15% goes to the length of history. Most people think this is the time since you had your first account opened. Let's say you had a credit card, you've had it for 20 years. You're like, okay, I've had history on that credit card for 20 years, but that's not how it works. How this particular algorithm works is they take all of your credit, whether it is a credit card or a loan or a mortgage, however much credit you have had, and they take the time that you've had it and they average it together. And that's the number that you have. So this is the only thing that you really have very little control over. The only control that you have over this one is if you have somebody that is adding you as an authorized user, let's say they've had that credit card for 20 years, then you'll be piggybacking on their 20-year length of history. And that's about the only thing that you can do. Please understand that if you close down a credit card that you've had for 20 years and you've had good payment history, as soon as you close that card, you're wiping out your history that you have on that card. So that's why it's important not to close down your credit cards. Keep it open for your history. Instead, you can call them and decrease the limit. Let's say it's a $20,000 credit card limit and you really aren't going to use it anymore. You can call them and say, look, decrease that credit amount to $5,000 or $7,000, whichever you prefer. And that way you're not closing your history and wiping it out. You're just taking off your peace of mind and saying, I know that if somebody steals this card, they're not going to have $20,000 to use. So keep those things in mind, and that's what you can do to actually control this algorithm. The next one is 10% is the type of credit that you have. So credit cards and lines of credit are least in this category. Car loans, secure loans, unsecured is heavier weighted, and mortgage loans are heaviest weighted. So if you have a situation to where the example I gave you, you have over $1,400 limit and balance on your $5,000 limit, what are some things that can help your score? You can actually take that and do a debt consolidation, put it on a loan. You will then have increased your score by 40%. So you're thinking, well, how does that increase my score by 40% if I do a debt consolidation and pay off my credit cards? The way that works is you're increasing it by taking and increasing your utilization, which is 30% because you've paid off your credit cards, and then you're putting it on a loan, so you're increasing it by another 10%, which is a total of 40% because loans are heavier weighted than credit cards in this category. So why is there an algorithm of 30% for credit cards and lines of credit? Why does the Bureau and the banks think that's heaviest weighted? And I'm going to tell you why. Please listen to me when I say this. Credit cards were never meant for long-term financing. Credit cards were never meant for long-term financing. If you have a credit card and you've had a balance on there for a long time, you're not using your credit the way that it's meant to be used. Credit cards were only meant for short-term financing. That's why the Bureau is looking to see how you're managing your credit cards and your lines of credit. Are you using credit cards for long-term financing? If you are, you're possibly going to get hit 30% on your credit score. If you are, please consider putting that on a loan, fixed rate, fixed payment, and pay it off. So a lot of times I'll throw out there a couple of commercials, not because I'm trying to sell you something, only because I want to give you something to think about. We have a credit card for the business and personal. Right now, special, that is 15 months, no interest and no annual fee. And you can be a startup business and you can do the business credit card. But if you're looking to finance a project through a credit card and you're planning on having that balance on there more than 2 years, I would encourage you to come up with another strategy. But if you're looking to do business supplies or things that you need working capital for and it's going to be short term, by all means, do the business credit card. And now you can see how easy that is. We don't ask you for tax returns or anything like that. We're taking your word for everything and we're looking at your personal credit to approve that business credit card. So you can see how easy it is, but just because you can doesn't mean you should. Really fine-tune the way you're thinking. Think of a different way. Come up with a strategy. When you pick your partner, which is your bank or credit union, hopefully it's Fulton Bank, and sit down with a Sabrina Davis, which is a financial advisor, come up with a strategy together. We're going to roll up our sleeves. We're going to figure out how to make this work, and we're going to come up with a great strategy of figuring out how to do financing for your business or for the personal reasons. So that is things that I want you to think about and keep in consideration. So 10% goes to inquiries. This is the number of time that you have a hard pull on your bureau. What is a hard pull versus a soft pull? A hard pull is something that's going to stay on your bureau for 18 to 24 months. It will not fall off until then. That's a loan inquiry. If you get approved or declined, or you get a letter in the mail, that is an inquiry. If you do go to a car dealer and they're trying to find a bank that can approve your loan and they pull your credit 18 times, you're going to have 18 pulls, and it's not going to fall off your bureau until 18 to 24 months. Most people think, it'll fall off in 12 months. It will not. 18 to 24 months. What's great about Credit Karma is it will tell you, and by the way, that's a free program that they're taking their best guess to help you understand and manage your score. One of the things they do is they tell you what month and year that inquiry is going to fall off on your bureau. You don't have to guess how long, much longer. Once you get to 10 inquiries, you are already in the red. You want to stay 7 to 10 pulls within 18 to 24 months. If you're more than that, you're already risking the chance of getting declined from a bank. And the reason why is because we really don't know in a lot of cases, if you're all over town pulling credit, what you got approved for, what you got declined for, and we have to include that in your debt to income in order to approve you. The other thing that we think of is that it's a trust factor. If you're all over town pulling credit, you look desperate. And if you're desperate, that raises a red flag. What's going on that you're trying to pull credit all over town? Why are you so desperate trying to look for a loan? And that is the reasons why and behind what that algorithm looks like. But please keep in consideration, sometimes I've had a client that has an 800 score that comes to me and says, Sabrina, I'm trying to get a better rate, but I need you to tell me what your rates are at the time, and I don't want you pulling my credit. Keep in consideration, this is only 10% of your score. If you're trying to save money, pull credit to get the better rate. Sure, we can take a guess at what it might be, but a lot of banks or institutions have to actually inquire to understand what the rate is going to be. They can give you an idea within parameters of what your rate will be, and typically I do that. But at the end of the day, they won't know for sure until they pull the bureau. Because remember, you can have a 700 score, but you've got a collection or something on there, and you'll still get declined if that hasn't been cleaned up yet. So just because you have a good score does not necessarily mean you're going to get approved. So you want to take that in consideration. What's a soft pull? A soft pull is like you opening an account at a bank. We actually do a soft pull to see what the bureau looks like. If it's a 400 score, you may get declined for opening a bank account. If you owe on check systems other banks, you may get declined for opening an account at a bank. And those are the reasons why there's a soft pull. If you're doing Dominion Power or utilities or you're renting, they will also possibly pull your score, and usually it's a soft pull. What is a soft pull versus a hard pull? A soft pull will usually fall off your bureau within 3 months. A hard pull is an approval or decline, and it falls off your bureau within 18 to 24 months. That's the real difference between the two. A lot of times I'll have or get a question, what is a good credit score? And this is not from me. This is from myfico.com. This is an idea of the national average. So you can see here 680 or above is really where you want to try to get your credit to be. If it's below that, it does not necessarily mean that you'll be declined. It might be that they want collateral or your rate might be a lot higher. But if your score is under 640, I would highly recommend and suggest working on increasing that score and fixing it before you apply for credit. And if you're getting declined after a couple, 2 or 3 times, don't fall for the idea that I'll just find a bank and keep applying until I get approved. No, that's probably a red flag that there's something going on that you need to fix and get your score stronger before you continue to keep applying. Because the last thing you want to do is have 10 pulls and then you're pulling your score down 10% more because you have all these pulls on your credit bureau. So some things that I want you to think about to help your personal credit. You can get copies of your credit report. Please write this down. It's annualcreditreport.com. Annualcreditreport.com. And the reason why I give you this is because this is the only free place that you can go and actually get all 3 bureaus to send you what your credit report is. Now, keep in mind, they're not going to give you your score. I want to repeat, they're not going to give you your score. The only way you can actually get your score is if you're applying for a loan and you're getting approved or declined, we are regulated to send a letter telling you what bureau we pulled and what your score is based on that bureau, and 3 factors to make it better. Annualcreditreport.com will give you 1 report free per year. Now, what they're doing and something that they have updated on their site is because of COVID-19 and the lack of trust out there with pulling bureaus and inquiries, they are giving you for a limited time unlimited pulls on your credit bureau to see what line items and what's going on. It's a great time to fix or repair credit, because you can go to annualcreditreport.com right now and pull it every 30 days if you want to. Now remember, the reports update every 30 days. So if you go on today, pull it, and then you pull it again tomorrow, it's going to be the same thing, because it's probably not updated unless it's that 30th day that it's updating. So pay your bills on time or set up bill pay. You're thinking, well, Sabrina, that's easy enough. Well, bill pay is a way to set it and forget it, as George Foreman would say. Those of you who might know who that is, I'm going to give you another example. Find a bank that doesn't charge you monthly maintenance fees for having an account. I'm going to give you another commercial or an example. Fulton Bank does not charge for minimum balance requirement or a monthly maintenance fee for any of their personal account and business accounts. You can have as many accounts as you want, and I'm going to give you an example of the way I personally budget. I have a checking account for vacation. I have a checking account for Christmas. I have a checking account for my grandchildren. And I have a checking account for bill pay on my bills. I have an account for a car account, and I'm going to explain to you what I do. So my Christmas account, I know I spend a certain amount of money every year on average for Christmas for my family. And I take that, divide it into 12 or 11 months, and that's money I have going into that account monthly to build that up. So in November or October, I take out the money and I go and buy the presents. I am preparing for that expense instead of borrowing for it. You can do the same thing with your business. Well, if you bank with Fulton Bank, or you have a bank that doesn't charge you for several accounts for having business checking account. Let's say you're a landscaper and you have several employees. You can have an account that's a payroll account. You can have an account that is a merchant services account. Merchant services is just a way to receive funds for whatever product or services, whether the customer is paying with a debit card or a credit card. And then you can have a expense account. So that's 3 different business checking accounts that you can have. Your accountant's going to love you. You can splice out how to do payroll or any of the above. And that is just an example of how you can budget accordingly using the bank and having several accounts. But if you're having to have a minimum balance, or you have to have a monthly maintenance fee for just having an account with that bank, it's not the right way or technique to do that, because the last thing you want to do is be charged a lot of fees to use that technique for budgeting. So that's number 2. Number 3, learn the legal steps to report your credit report. See document. So on Credit Karma, it has a dispute beside the trade line if you decide you want to dispute it. But I would encourage you to go through annualcreditreport.com to dispute it, because they're faster. Number 4, understand your score and how it is determined. You can cross this one off your list. Congratulations. Now you understand the algorithms and understanding how to do that. And then if you are paying a company, which is number 5, to repair your credit, in my opinion, unless you just don't have time to do it and you want somebody else to do it for you, you're wasting your money. They do not have a magic wand to help you repair your credit. And you may say, well, Sabrina, they called on my behalf to settle my account. I didn't have to pay all of it. Well, you can do the same thing. You can call the institution and kind of work out a payment plan or even work out a settlement. There is nothing that they can do any different that you can't do for yourself. So keep the money and do it yourself. Now you know how the algorithms work. But they are a company that is in business just like you are or you're thinking to be. They're a business model. What they do is help you repair your credit. So if you decide you want to use that company and their resources to be able to help repair your credit, then by all means do so. They're just a business model to help you do that. Lastly, in this particular presentation, I wanted to give you something, if you have an extra gift to take away. So if you have a collection or you have a judgment, please take a picture of this particular screen. Write it on the back of your check when you're paying it off. Again, this is for only judgments or collections. Write this on the back of your check under the endorsement line where they sign. It says, endorsement and clearance of this check payment settles all claims by creditor against in full, and creditor further agrees to delete all derogatory credit information reported to all credit reporting agencies in full satisfaction of any and all debt owed to the creditor. This can serve as your receipt. Once they sign it and they cash the check, it serves as a receipt. You can go down to the bank and get a copy of the front and back of your check. And if they don't take it off the credit bureau, you can send that to the credit bureau as proof that you paid it, and they will take it off. And the creditor is bound by law. This is not from me. This is from an attorney. They are bound by law to abide by this if they sign the check and endorse it and cash it. So with having said that, I want to give everybody about 2 minutes or 3 minutes to get coffee or grab some water while I bring up the last presentation of the business credit score.
Good morning, everybody. This is Deborah Gittens with the Women's Business Center. A lot of you have logged in under aliases, and in order for me to be able to send out Sabrina's presentation, I've replied to a couple of you through a private chat to please provide your name so that I can send your presentation to you after we finish here. So if you would check your chat, you'll see you received a private message from me to please provide your full name as opposed to the alias you have on screen. Thank you.
Okay, let's go ahead and get started. So I hope you found that information to be valuable. Again, Deborah, thank you so very much, and humbly I thank you for allowing me to present for the Women's Business Center and help everyone with an understanding of their personal credit score. And I just want to end with the personal credit score as most banks, I would say 99.9 banks or lending institutions are going to require you as a personal guarantor, along with the business guaranteeing the loan, because at the end of the day, the bank just wants to know that they're going to get their money back, right? So if the business were to fail, then they want to know that they're still going to get their money back, and that's why they ask for a personal guarantor. So I just want to also reiterate, that's the reason why having a great relationship with your bank or credit union, whomever you choose, once you do your interviewing, of course, I'm up for being interviewed. Please come see me, even if it's not to choose Fulton, even if it's just to come up with a strategy. I'm here to help, because my passion is to make sure that you're successful in your business over the 24 years that I've done this. And the knowledge piece is probably the number one when I think of some reasons why they failed in some cases. And it's so critical for me to really get that message across with things that I think that you should know, either as you're in your business or you're starting your business. So, please keep in mind when you choose the bank that you're having a relationship with, they take that in consideration for the loan approval. It's not the decision maker. It is one of the decision factors that they look at. So let's say you don't bank with Fulton Bank, but you're interested in doing a loan with me. Absolutely, by all means, reach out to me. Let's talk about some options. It's not going to necessarily it won't get declined because you don't bank with me. It's just one of the factors that I would take in consideration to get you approved if I had to go to bat for you, because I'm your advocate. And, I can very easily say, well, yeah, the score might be a little bit challenged, or debt to income might be a little challenged, but they have a relationship with us. Maybe we can ask for collateral, a long-time relationship, and kind of move it to an approval versus, okay, they don't bank with us. We don't know anything about them. The score is challenged. And so they might opt to decline versus if you had a strong relationship with us, we might opt to approve. So again, it's not the decision factor. It's one of the things that you want to keep in mind as you're choosing the bank that you are going to do business with. So with having said that, I want to let you see this particular material briefly. I'm not going to spend a whole lot of time on the business credit score because, unlike personal credit score, it's dictated by the institution reporting the information to the bureaus. The business credit score is really dictated by the research and reporting that you do to help build it up. So what I want to do is offer this information. It's not from Sabrina, it's from Small Business Administration. It's Money Smart. It's a great participant guide that talks about credit reporting for small businesses. And you can see here, it's really a very user-friendly template package. I want to offer this as another gift to anybody on this call. Please reach out to your coordinator, Deborah, and the coordinator who is running the call to ask for this template. I believe she's going to send it out anyway to everybody on this call, to their email provided when you actually signed up and registered for this class. So you're going to get this, and on page 8, it talks a lot about, and this is 7, this is 8, the business factors and your credit report, the 3 bureaus. There is Dun & Bradstreet, Experian Business, and Equifax Business. Those are the only 3 bureaus out there. I want to tell you that all banks use Dun & Bradstreet. I don't know of any bank, not that they don't, but I am not aware of any bank that use Experian Business and Equifax Business. Most of us use Dun & Bradstreet, and you can actually go to Dun & Bradstreet website, learn a little bit more about your business bureau. They do charge for packages to help you build your credit for the business. It may be something that you want to spend money on if it's not something you really want to spend a whole lot of time on with reporting and keeping up and monitoring that. I think their least expensive package is something like $600. You'll have to go on that website and decide if you want them to partner up with you to help you build your business credit score. But at the end of the day, you can do it yourself. This packet kind of gives you what's included in the business credit score. It also talks about if you are a business that is going to be using a program to pull customers' score in order to do business with them. It talks about the regulation you have to follow, the one that I talked about where you have to send out a letter saying whether they're approved or declined, the 3 factors and which bureau you pulled. It's really a neat packet. And this is a gift to you. It has some links in there. It has a little program in there that's a workbook. It talks about how to protect yourself. This part talks a little bit about the personal impact your personal credit has on your business. It talks about the annualcreditreport.com. But the program that I just went over and the presentation that we just went over for an hour is a lot more detailed than this. And this just kind of does a quick overview about your personal credit score. It doesn't give you all the details that I have given you in advance. So with having said that, that really wraps up the business credit score. And the last, let's say 30 to 40 minutes, we're going to talk about the questions and answer questions that you might have had. So I know that we had some great questions that were in the chat room, and I just want to take a minute and kind of review those and answer any questions that you might have. I want to encourage you again to sign up for the next class. That's going to be in February. I know that Deborah's probably going to review it or put it in the chat room as well. It's talking about the 8 C's of credit and what banks look for when they're trying to approve a loan. So you won't have to be frustrated or just not know what's expected as you're applying for that loan. Great presentation because it's dealing with all credit unions and all banks. Just want to go to, let's see, your card is blurry. Oh, yeah. So my card was blurry on the presentation. I have put my contact information to everyone in the chat room. It has Sabrina Davis, Vice President, Fulton Bank. It tells you I'm at Bonnie Road, and my contact is 757-503-0232. And then let me put my email address, fdavis@fultonbank.com. If you want to reach out to me by email, I'm happy to talk with you anytime necessary. Let me make sure I can say to everybody. All right, there we go. You have my contact information. So thank you for letting me know, Natika, Ms. Hill. I hope I didn't pronounce your name wrong. And then, so someone has a question of how do student loans impact you? As long as they're in deferment, they're not negatively impacting you. Once they're out of deferment and you don't pay on time, it is negatively impacting your 35% of your score. So you want to have a strategy of being able to pay on time when student loans are out of deferment. When they are in deferment and you're not having to pay them right off the bat, we will take in consideration what the payment will be once they're out of deferment in your debt to income. So great question. Thank you so much for asking that question. So is the slideshow presentation available after the meeting? I will leave that up to your coordinator to decide if they want to send this out to everybody as well. And if you need it, so Deborah, are you still there? I know you probably are.
I'm still here.
Okay.
We'll send it out. However, there are quite a few people that are logged in under an alias. So I've sent you guys a private chat. Please reply in that chat to my question so that I can get your name and I know where to send it. So I know where to send it.
All right, sounds great. It is another great question. How far back should you clean up collections? I would say as long as they have been paid off, and this is a really great question as well. The most important thing for you to know, if you have a collection or judgment that has been paid off, but still showing, I would encourage you to continue repairing your credit. So when you have a collection or a judgment that's been paid off and you're trying to repair credit, the bank will consider, or institution will consider, at least approving you after you've shown that we can trust you for 12 months. So it doesn't necessarily mean you're going to get declined. It just means that the rate might be higher because we're like, okay, we don't trust it quite yet, but we'll give you a chance. We'll give you $300 on a credit card. Let's see, how you do with that and kind of test you out. The other way that you can repair credit as well or build credit is by secured credit card. You can put $300 down. You have $300 limit. The important thing to know is make sure you're within your utilization. Right now, as another commercial, Fulton Bank has the secured credit card and there's no annual fee. Most secured credit cards have an annual fee of $39. Because of the COVID, we're offering it without that to help the community with a challenging situation. So we do not have an annual fee right now for our credit cards, for the secured credit card. And of course, you guys know about the 15 months, no interest, no annual fee on if you're looking to do maybe supplies, and that's on balance transfers too. So if you're looking to try to pay it off, but you don't want to pay any interest, a great opportunity to switch that over. You can reach out to me and I can take care of that for you. So great question. Second question is, what if they don't remove after payment is paid in full? So what you can do is dispute it through the Bureau, and unless they can prove that you still owe it, or you can provide that you've paid it off, they should be taking it off the Bureau. But at the end of the day, it eventually will fall off, and I want to say probably in about I think it's 7 years that typically judgments and collections after being paid off usually fall off. But even if they don't, it's not a deal breaker. We take in consideration. We might ask you what happened, but it won't be like a decline. As long as you've repaired credit, you've shown that we can trust you, it's not a deal breaker. So I wouldn't really worry about that too much. Next question from Ms. Williams. Did you say to put the restrictive endorsement on the back of the check? Yes. So as you flip over a check that you're writing, you have the line where somebody is signing it and they're going to cash it, right? Right under that line, put that endorsement under there. So when they sign it and cash the check, they are bound by that agreement by law. So great question. Does this apply to all collections? Yes, it does. Again, that's not from Sabrina, that's from an attorney. If you were to go to an attorney and you're trying to help clean up your collections or judgments, that's one of the things that they will do or ask you to put on the check or cashier's check underneath the line as an endorsement to have them let them know that they need to take that off the credit bureau. So if I live in CT, am I still able for business or personal line of credit? Yes. And the other thing is we're in 5 footprints, Fulton Bank is. We're in New Jersey, Maryland, Virginia, Pennsylvania, and Delaware. So you can still do a line of credit or credit card with us, even though we're not in that particular state as far as footprint. And then the next question was, what is a Dun & Bradstreet number and how does it influence credit? So Dun & Bradstreet, if you are looking to do business with the government or the state or the city, they require you to use their website to apply. They require a Dun & Bradstreet number if you apply. And that's the way that they know if you have good credit with your business or not. So let's say you bid on a job for the city or the government, and for some other reason, you weren't able to come to fruition with bringing that to the forefront. In other words, you weren't successful with that contract and you had to give it up. Then I would suggest that you understand that your Dun & Bradstreet will not be used moving forward with them, no matter how many times you apply, because if they can't trust you to complete a contract, your Dun & Bradstreet number goes on a list that says you can't complete a contract and that your business is not trustworthy. So that is one reason why your Dun & Bradstreet number is important. I would ask you to reach out to Deborah, the Women's Business Center. I'm sure she's going to have SWAM certification, government contract, and what Dun & Bradstreet and the importance of what that means. Education is critical, and she can articulate to the next class that she might have based on that next presentation. And there are resources in your community as well, such as the SBDC, Small Business Development Centers, the Economic Development of each city. You've got Veterans Business Outreach Center. You've got the SBSD that can help with your SWAM certification, Dun & Bradstreet, understanding what all that means, and would encourage you to reach out to those free resources in your community to help you with that. Let's see, you pronounced it correctly. You are, okay, so, so I'm trying to find the next question. Encourage you to stay on for these questions because sometimes they can give you more information that I might not have covered. Can you just repeat what you said about Dun & Bradstreet? I missed a little of it. How do we apply for secured credit card again? So if you want the secured credit card with Fulton Bank, just contact me. I've given you my contact number, or you can email me and I'll call you, and we can do it right over the phone. That's fine. So the Dun & Bradstreet, we talked about how you can go to the Dun & Bradstreet website. Dun & Bradstreet is important as to most banks use them to pull your business credit score. You can go to their website. They charge a fee, but they'll help you build your credit score for your business if that's what you want to do, but you can do it yourself. The packet that I am providing Deborah and the Women's Business Center to send out to you has more information. It even has the link for the Dun & Bradstreet website if you want to go down that road. But 99% of the banks use Dun & Bradstreet to pull your business credit score. So it's important that whether you're starting a business or you've been in business, that you start really working on that business credit score, because we do two things when we're doing a business inquiry for a loan or anything for that matter. We're going to pull your personal credit score and we're going to pull your business credit score. So for the person in Connecticut, again, just reach out to me by email or my phone number. Either way, we can do the secured credit card over the application over the phone. That's no problem. Let's see. The secured credit card, do those ever get converted to? Yes. So great question. The question is, if I do a secured credit card, does it ever get converted to an unsecured after the period of time? Well, what's great right now is, even though it's a secured credit card, we're not charging an annual fee. Let's say you're ready and you've built credit and you're like, okay, I want my money back. I don't want to use that as collateral anymore for my credit card. Absolutely. It doesn't get converted. What we would want to do, and usually about 12 months after you've had the secure card, we will want to see if we can convert that to an unsecured request and give your money back. And then in some cases, we might have a special going on, like right now, 15 months, no interest, no annual fee, and then it's not secured. So yes, it's important that if you are repairing your credit, that you are, qualifying yourself, that don't stay in that state of repairing. Like if you have high credit card rates and you've repaired your credit, it's time to take and pat yourself on the back and find the credit card that's best for you. If you start increasing your score, you need to transition to less of a rate, and instead of paying that high rate that you have, and that includes loans. Let's say you get a car loan right now and you're paying 15% on that car loan. And, it is what it is, because the credit was challenged for whatever reason. You wanted the car, and now in about 6 months, you've repaired your score, and now your credit is better. Don't stay on that 15%. Reapply to redo that car loan and try to get it down to 3 or 4%. You worked hard on repairing your credit. You should be rewarded for that, and that means not paying so much in interest. So don't stay where you're at. If you're repairing your credit, as time goes on and you're into that category of repaired credit and it's better, let's see about getting you better rates. Another question from Tiffany: to open a checking account with you all, you just require the regular business documents, EIN, state registration. That's correct. We'll ask for a copy of a driver's license, but those are the two things that we will ask for, unless you're a sole proprietor and you're doing business under your Social Security number, which I would highly recommend not doing. But yes, that's all we ask for. So thank you for asking, and then thanks for the webinar information, Sabrina. Thank you, Ms. Green. Does Fulton have a division that focuses on small business? Yes, you are talking to the person that focuses on that division for small business. I'm vice president in that area. And we do commercial loans. We do all of the details of what that looks like, not just small business, but you will find that we really specialize in that area. Let's see, this person's from Florida. Did I hear you say I can reach out from my state? Yes. So you can reach out to me even if you're in Florida. And then thank you so much for the presentation. To piggyback off Tiffany's question, do you have to have the articles incorporation as part of the registration document? So if you have the articles, and they call it a State Corporation Commission certificate, that's all I need. And then the SS4, which is sent to you or you downloaded when you opened your business, they gave you your tax ID number. The SS4 is just a document from the IRS showing proof of your tax ID number. So those are two documents you want to make sure not only when you're opening an account, but you want to have those handy at all times, because if you have a vendor that you're looking to do 30, 60, 90 day out pay period before you have to pay them, they'll ask for those documents. So that's really great. So great questions. And Ms. Deborah, I think we went through all the questions, which is great because it's 11:39 before 12 o'clock. Any additional items you want to add or anything else that we can maybe add as value to everyone here?
I can't think of anything at the moment. Tasha, Erica, do you guys have any suggestions?
Not at this moment. Yeah.
It was a wonderful presentation. Thank you so much. Just so that everybody knows, Sabrina will be doing a series for us for the next 4 months. So if you missed anything today, we will be redoing this in February, March, and April. And we will also be posting this on our weekly newsletter. There'll be a link that will replay this event for you because we have recorded it. So thank you everyone for attending. Again, please send me a direct text on in the chat on what your name is. Trey, 1 minute. Go play on your computer. Go play on your computer. And so that I know who I'm sending stuff to. I was out of the 40 people that were online today, I was only able to identify 29 or 20, somewhere in the 20s. So several of you need to let me know who you are so that I can send you a presentation. Past that, it was great having so many people log in, and we look forward to having you at the next event.